So, do you know, is it better to be a renter or a buyer? We're going to talk about the net worth of a renter versus a buyer.
And let's give you some updates on new construction and what it's doing.
And then there's all sorts of new information going on about mortgages that you need to know and be in the know about right now. So, welcome to the Max One Market Update.
I'm Ming Richardson. I'm part of Maximum Team.
And I'm Alan Richardson. I'm part of Max One team as well. And so let's go just jump in and get started here. So we want to start right off by talking about like what is the median net worth between an owner versus a property owner versus someone that rents, right? Because is it cheaper to rent right now than it
It
is?
is cheaper to rent right
Yeah,
now.
yeah, it is.
Okay,
And
it
so it
is.
must be worthwhile over the long term then.
Not really. So,
Yeah.
according to the national data that's been gathered, last year homeowner net worth was 396,200. This year it jumped up, projected in 2025 to be around $430,000, while renters prior year net worth was $10,400. And this year they're projected to come down to $10,000. So, do you want to be in a game of wealth building or do you want to give your money away?
See, what we want you to really understand is like these numbers, if we don't do it with like emphasis here, you may not really spot that there is such a huge disparity between a renter versus a homeowner. Like it's not even in the same ballpark. So for 2025, the average net worth for a renter, $10,000,
$10,000.
10 grand, right? The average net worth for a homeowner in 2025, $430,000. So we're not talking like, oh, just a little bit better. We're talking
A
night
lot.
and day different. Now, does that mean if you become a homeowner that your immediately net worth jumps up to 430? No, that's not what I mean. But if you took all the renters in the United States and you divide their net worth just by the number of renters, you'd come out to about 10 grand. If you take all the homeowners in the United States and you divided them by the number of homeowners, you get 430 grand. So, which group would you really rather be part of? Do you want to be part of the group whose net worth is around 10 grand, less than the car that you own for a lot of people?
Potentially,
Or
not
do you
not
want to be part of a
always.
group whose net worth is worth $430,000? Now, we get it that being a homeowner has additional risk, more, I mean, maybe not risk, but more cost. It can be costlier. It's harder, especially for our first time buyers in this market right now. We get that things are challenging, but please don't feel like it's not worth it, right? I mean, we
It is so worth it.
and you got to understand that we talked. I mean, we talked to our kids just this week about like today even about the importance
Home
of
ownership.
home ownership, and we are huge proponents of it, right? And so we just want you to understand that there is a big difference between the two, and we're here to help you if we can on that.
Absolutely. Now let's talk about new construction.
Mm.
So, new construction, they're sitting on a lot of inventory right now.
And now for you, if you're looking to buy a new construction home, this is a really good time because uh, when we haven't seen this level of
Inventory.
inventory since the market crash back in 2007, right? And so I'm not saying that we're heading to a crash. I'm just saying that, I mean,
Well, we're
it's been almost 18 years kind of thing since we've seen this level of inventory in the new construction space. And in when it comes to real estate, you have supply versus demand. And right now, we're getting some extra supply.
from the new construction. So, once again, we understand it's about affordability, but at the same time, you may get a very good incentive from the builders to
Well,
where you can invite down your rates or have better incentive or
that's the thing we're
contribution.
seeing. We're seeing where our builders right now are offering a lot of incentives. Some of them are buying down mortgage rates big time because they're sitting on inventory. They're making some nice deals going on out there.
Absolutely.
See, and by the way, you're never going to get a deal. Maybe never is the wrong word, but you will not generally
Rarely.
get a deal on inventory on a builder's inventory that's not built.
Correct. The
You're
pre
always
sales.
going to get. I mean, you're going to have a much better chance of getting a deal on inventory that is standing because that builder's done with it. Right now, he just needs to sell it so he can get his money and move on to another project. So
Correct.
that's where you're going to get your best deal out there. And so we know that more as interest rates come down, that's going to help more people be able to afford a home. But when you're talking about townhomes right now, it depends. I mean, not townhomes. When you're talking about new construction right now, I mean, townhome is the big thing that we see being built right now, largely because of affordability.
Correct. It's a first level entry, and just remember, townhomes not what it used to be. Okay, they have built it to where it's now a community, and it's got a lot of green grass space. Not only that, pool amenities that can attract a lifestyle within the townhome.
Well, a lot of our first time buyers, like back in our day, the starter home was that 3-1 ranch, 3-2. It was a
Three
three.
one
It
and a
was three
half if you're
one. Yeah,
lucky.
yeah, that kind of
Yeah,
stuff. But and then it was the 3-2 ranch, and that home is just not out there in any great quantity. And so, what is out there? Townhomes. Townhomes is a product that the builders can afford to build at a price a
the
lot of
buyer
our
can
starter
afford.
buyers can do it. Plus, a lot of these townhome communities, they're on major commuter routes. They're near shopping and retail and all these kind of things going on. They're in the midst of everything. And when you have a townhome, you don't have to worry about the roof. You don't have to worry about the lawn, maybe that kind of stuff. So a lot of those things are kind of wrapped up. You don't have to mow the grass every weekend. And so it can be very, very convenient for a lot of folks. So we're just seeing where that's a really good,
Option
yeah,
is a
really good
good
option.
alternative.
So but the reason we bring up new construction is especially when you're talking about first time buyers or buyers in general. Sometimes they're just like, well, I could never afford new construction. Yeah, you can.
Yeah, you can.
Yeah, absolutely.
So now let's talk about credit card and auto loan. Right now, we're facing a 90 plus day delinquency. So if you are trying to buy a home, pretty please do not ever let your credit go into delinquency.
Well, we're seeing where more borrowers are seeing their auto loans going for over 90 days delinquent, and credit cards. The people are paying more just minimum balances, and they're also not paying their credit cards as much. This is a huge ding on your credit. And when you get ready to try and buy a home, if your credit's not like you can buy at 580, but you're going to pay more, right?
What that means is instead of getting a decent interest rate of maybe 6.3, you may be at 6.95. And that's the difference between good credit
Or
and bad
7,
credit.
yeah. And
Okay,
that makes a big difference in your payments over the amount of time.
it does.
Now, overall, we're seeing where interest rates are moving in a very good way right now. And depending on the type, well, interest rates are somewhere in the mid sixes, and so that's better than where we were eight. We were close to 8,
At one point.
into last year, even early this year,
Hmm.
kind of thing. And so mortgage rates are moving in the right direction, but don't think that they're going to move any substantial amount. We see it just kind of moving like a herd of turtles.
Yep.
It's going to be nice and slow, steady. We'll probably be seeing it into the mid to low sixes later this year, but it's not going to be moving much. And if you're one of these people who say, well, I'll wait for rates to hit 3%, just accept that you're never going to buy a house again. You're just not going to buy a house if you're going to be waiting for interest rates at 3%. It would take something catastrophic. Because when we had 3% rates, that's when the Fed was buying mortgage backed securities, and it was an inflated number done by the government. That's not market driven, and that's why it didn't last. And so, please don't think that those rates are anything close to normal because they really, really aren't. Now, the good news and bad news about rates here is that the more that we see market turmoil, the better it is for mortgage rates. I know that's kind of like it's not a popular thing to talk about, but I'm just being straight up that generally speaking, bad news is good for mortgage rates because mortgage rates don't, a lot of folks will think, oh, well, the Fed's going to lower the federal funds rate or things like that. And
That don't
there is some
always.
impact there, but you understand that the 30-year mortgage rate follows the 10-year treasury, T bills kind of thing, 10-year treasuries. And 10-year treasuries gets moved because of economic data, because of inflation, and also because of government borrowing. Those are the three big
Correct.
things that really affect 10-year treasury. And so, like when it comes to economic, we're seeing good numbers still coming in on jobs. We're not seeing terrible stuff on jobs. I mean, it is fluctuating around, but jobs are generally pretty good right now. And so we're seeing inflation moving in the right direction. It's not at our targets.
It's not steep declining, but it is moving slowly in the right direction.
Again, another herd of turtles here. Yeah,
Yes.
exactly, kind of thing. Now, the good news about inflation is that wage, starting about a year and a half ago, wage growth outpaced inflation. And so
Which is
we
great.
need that. Absolutely. So, is inflation where we want it to be? No. Is
No.
it moving in the right direction?
Yes.
Yeah, we're really glad to see that. And see, all these things are kind of affecting our mortgage rates right now with what's going on. And that's why things aren't moving super fast.
And right
You know,
now, the FHA and VA loan is actually more preferred. If you look at the graph, you can see that FHA is beating a 15-year conventional loan right now in interest rate. So,
so I mean, and the reason we bring this up is some people will quote a mortgage rate. And you got to understand it depends on the type of mortgage. Because right
mhm,
now, a 30-year conventional mortgage is running closer to 6.7, six point six
correct,
five, somewhere in that range. Whereas an FHA might be six and a quarter, six and an eighth. That's a pretty big difference in payment. VA, same kind of thing. Both VA and FHA are have some of the best mortgage rates that we have in the industry right now.
correct.
Even better than, like Ming said, the 15-year
Conventional loan.
conventional. So not all mortgages are created equal.
And it
You
just depends on individual's credit too.
right.
So you may get a better rate than some of the folks when you have a great credit.
Absolutely. Now, there are differences also that goes in there. Like you have to understand the pros and cons of every single type of mortgage. That's why you want to be with a mortgage professional right up front because with VA, you do have a VA funding fee, but you don't have any mortgage insurance. With FHA, you always have
Have
mortgage insurance.
yep,
With a conventional loan, if once you get at least 20%
20%.
equity, you don't have any mortgage insurance. And all these can affect your payments. So some things are going to be right for you at certain times based on where you're at, what your family is, what your goals are, that kind of stuff. The person who's really going to help you with this is your lender. You need to
Correct.
have, in our opinion, a local lender who's looking out for you. Now we use Sharon Thompson almost exclusively. She does an amazing job for us. We'll be glad we'll include her information in here if you need to speak with a lender who has a heart that will also have your back. We
And
strongly
she will
encourage you.
always tell you what is the best rate for you and what type of program, in addition to any grants or DPA available to you.
Yeah.
So we would love to help you. Please give us a call, text, or as Alan say, text smoke signals.
Yes.
So visit us at max1partners.com or call us at 678-782-5050.
You can email our team at team@maximumpapartners.com. Hope you guys have a great week. Let us know if we can help in any way.
Thank you. Have a great day.